Good afternoon. This is Dyer Kennedy with Divergence Analysis. We're looking at the DVAN SmartLines package on NinjaTrader. This is our contact information, dvansmartlines.com, for more information and free trials. First, I wanted to go over a NASDAQ 4 range chart from yesterday. This is August 19th, yesterday August 18th. Eastern time, the chart is from about 1:20 to 2:20 p.m. on a 4 range. Wanted to go over first the signals that we're looking for in the DVAN SmartLines indicator package, and also this chart focusing on re-entries. Sometimes the trade setups meet all of our criteria and end up being a flat trade, a loser, or a slight winner, only to be taken out of the trade, and then the main move occurs, a re-entry, and the meat of the trade is still able to be taken. I'll show you the setups to look for and the signals that'll be able to get you into the initial trade and also to re-enter the trend for the bigger move. So first we see a red arrow. This is going to signal that we're looking for a short trade. So I've got this blue arrow signaling where the red arrow would occur. The red arrow is plotted when you see DVAN signals, the indicator below, the green line crossing below the blue. You'll see a green arrow plotted, as you see here, a little bit after 1:50 p.m. When the green line crosses above the blue line. This is a velocity-based indicator. So when we see a potential short or a long trade, we want to look at three criteria, kind of a checklist to make sure this is a confirmed entry point. First, we want to see the red arrow, and that signals for us to begin looking for the short. And then we want to see a few other things line up, a confluence of indications showing the negative trend in order to enter that trade. So we see a red arrow. We also want to see a red price bar. The price bars in DVAN SmartLines are painted either red or green. Red means selling pressure is dominant, and green means buying pressure is dominant. This is giving us very early indications of entries and exits, which helps because it's a leading indicator leading us into these short and long trades. So first criteria, red arrow. Second, red price bar. Third, we're looking at the DVAN short-term indicator. In the middle, you see a red histogram bar. That's indicating that the trend on the short-term basis is down. That meets all of our criteria, and we can go ahead and take that short trade there right after 1:30 p.m. In this case, you can see that it's mostly a flat trade. A first point of exit would be when you start seeing a green price bar, meaning buying pressure is becoming dominant, at the light blue line. The light blue line is the trend line, and this is showing at all points where the trend direction is. You notice that the trend line and the red line, which is the stop line, converge at various points to show selling and buying cycles. So in this case, we've entered a selling cycle. Price comes back up into that cycle, hitting some resistance, and this is a point that we would traditionally say to exit. This ends up being a flat trade, and as you can see in the future, this ends up being a much bigger trend that if we just took this first trade, we wouldn't be able to capitalize on. So we'll look and talk about the re-entry possibilities and the re-entry signals for re-entering a short trade. So a few things we want to look for when we're re-entering to the short side. One, and most importantly, for this trend to remain established, we don't want to see a green arrow given at this point. As you can see, there's no green arrow, so it's not saying, the indicators are not saying that we're turning back up into an uptrend. This is nothing merely than a bounce into resistance. And what really gives us the indication that this selling cycle is expanding, the selling cycle that began here is expanding to the downside with more momentum, is when you see the light blue trend line and the red stop line look like they're going to converge like they do here, and then push back away from each other. So this is an actual expansion of the selling cycle, and it'd be one of the criteria we're looking for to re-enter the trade. Secondly, you also see the leading line here. The leading line in the short-term trend indicator is showing us where that leading force is within the short-term trend that is established by either the red or the green histogram. When you see the leading line come back up above zero in the case of a downtrend, then break back down below zero, we're using this as a point of potential re-entry. So this is giving us the exact execution point that we could re-enter that trade. Lastly, we'll want to see the selling pressure come back in, which is the ensuing bar. We see the red selling pressure come back in, which is giving us not quite at the high, but at still a very good point to capitalize and capture some of this downside move. And this ends up being about an 8 or a 9 point move. So in this case, you're probably flat in the initial trade, but we still want to be able to get short. And we see the selling cycle look like it's going to converge back into a buying cycle, fail, expand, never fully converge, leading line pop up above zero and then back down, showing a re-entry into that negative trend. Red price bar showing a selling pressure picking back up, and we can ride that down until we see green price bars again, which will give us a nice early exit. Another example I've highlighted with this blue arrow. You can see green arrow is our first criteria for a long trade. Green price bar, meaning buying pressure is dominant, which is our second criteria. And green histograms, you can see it's established that we have a short-term uptrend. This is another case where getting out with the red price bar at the trend line, the good thing is you get out early enough to make this a flat trade, and in the case of the short and the long. That's one of the best aspects about the price bars, turning red or green. They do so very quickly in a leading fashion to get you out quickly. But as you can see, we still want to be looking to the long side. We don't get a red arrow, and when we see this convergence process occur in the smart lines, and then the smart lines push back into another buying cycle, and the leading line going below zero in the histogram and pushing back up, we're looking for a potential re-entry point. When we see the green price bar come in with the green histogram below, we're seeing buying pressure and positive momentum coming back into that uptrend, and we get another 4 or 5 point move in the NASDAQ. So this way, through an hour period, you might have a few flat trades, you get out quickly, and you're still able to get back in and capitalize on that larger trend. Now I wanted to look at the Euro dollar 1 minute chart. This is from today, August 19th. This is just before the open New York time to almost 11 a.m. and you see 36 pips is what we're going to end up tracking after I list all of the trades that we took here. This is a good example of taking trades, getting out early based on the leading indicators of the buying and selling pressure, paint bars, and then also a good way to show you how to filter trades and not take some of them in the consolidated times. So first we see a short trade. This meets all of our criteria: red arrow, red price bar, red histogram. We get out at the green price bar, and this is roughly 11 pips. Another long trade right at 9:40 on a 1 minute chart. This is green arrow, green price bar, green histogram. It's showing us what we want to see for a confirmed long entry. We take that trade and get out right when we see the red price bar closing below the trend line. This is our first exit point, and as you can see, it gets you out very quickly, so you can still capture some of that profit. That's 8 pips. We get into a little bit of mess around 10 a.m. but because the buying and selling pressure lines get you out pretty quickly, this is a 5 pip loss. We would not take this trade, and this is a good learning point. We want to see all indicators line up as we've been previously mentioning. So we have a green price bar, or excuse me, a green arrow in this case, but we have a red price bar and red histogram. So we don't have a confluence of indicators, nothing's confirmed, and we essentially ignore that arrow. Now we get another re-entry to the short side, and this ends up meeting all of our criteria and being a 3-pip trade. This is a long basing process. It meets all of our criteria though, and is a slight loser, -3 pips. This is another example of a short trade that we do not take. We get a red arrow, and that's going to alert us to the short side, but we don't have a red histogram at that point, and the price bars are red actually there, but we don't have a red histogram, so we're going to stay out of that trade. We ultimately continue the basing process, see another green arrow, green price bars, green histograms, and this is a good trade, the big winner for that interval of 22 pips. So all in all, this is 36 pips in a little over an hour and a half in the morning. This is a really good example of how DVAN SmartLines will put you into the trends at an advantageous point to make money, yet be quick enough to get out in choppy periods to minimize the negative moves, and also to keep you out of a few moves. If you look at an entire day of the euro dollar 1 minute, by only taking the arrows that line up with the other indicators, the price bars and histogram, you'll probably eliminate 10 trades or more, which ultimately you'll go back and see are consolidated periods that were not advantageous and were probably ultimately losers. So using these tools and indicators can help you navigate the markets and visualize what's going on as these markets move. Hopefully this helped. This is DVAN SmartLines. Once again, please feel free to get in touch for a free trial or more training. Thank you.